Hello, you're a little bit early. We're going to start promptly at 12:30. Go orange and blue. Has anyone seen Howard? We really can't start unless Howard Rosenblatt is here. Howard, if you're here, could you please raise your hand and we'll try to get started. Since most of you went to the University of Florida College of Law, we will be calling on you. We know that Phyllis Drickman is in the audience and we expect that she's sitting and ready to answer our questions. Please note that we are able to unmute your microphones, so be careful what you say. And please ask that dog to stop barking. Has anyone seen Shannon? We're about to get started. We hope you've enjoyed this initial program, but there's still an hour left. We're just waiting for Shannon. This is what she looks like on the screen. If you see her anywhere, please ask her to contact our office. There was a mistake in her grades, and it turns out she did not graduate. Oh, there she is. I'm sorry, Shannon, you did not graduate. That dream you keep having about that you didn't graduate turned out to be true.
Likely. Seems likely.
All right. Are you guys ready? Oh, did you? Oh, I didn't know that the audience was watching. All right. Well, my name is Alan Gassman, and I am here with my friends Shannon Summerlin and Andrea Fourman, and we are going to spend 60 minutes, not the 50 minutes advertised, but 60 minutes talking about something that's very near and dear to me and very near and dear to a lot of people on this webinar, and that is the University of Florida College of Law and how charitable giving really works in the real world so that you can benefit your favorite charity, whether that happens to be the University of Florida or the University of Florida College of Law or any other charity other than Florida State University College of Law. We're one of these, so we're going to need a repentance statement from them. So we are going to review your questions and your emails. You have our email addresses there. If we're not able to answer your emails during our presentation, we will answer them afterwards, and we welcome your advice. Please send the easy questions to me and the hard questions to Shannon and Andrea. Shannon and Andrea have not been on one of my webinars yet, so be very easy on them. And there is a picture of the Frederick G. Levin College of Law. Thank you, Frederick Levin, for stroking a $10 million check at a time when the law school needed a $10 million check. For those of you who want CLE credit, let us know if you need anything beyond what you see here. We will be sending you verification of attendance, and we thank you for attending. Now, when I do or go to a continuing education program, I have goals for myself that I want to achieve in the program. So I'd like you to think about what your goals are. We're going to talk about the best ways to financially support a worthy charity. And we're going to talk about how you might handle your charity. Many of the people on this webinar are very involved with other charities, and Andrea and Shannon set a wonderful example and have some really nice structure that you may want to steal for your charity. And in my opinion, you're welcome to do it. And number three, we want to educate and entertain you. hopefully more educational than otherwise. And Benjamin Franklin comes to mind because if you've ever read his biography, he left a 100-year trust in his last will and testament. And he said, invest the residue of my estate for 100 years and then start a university. And that is the University of Pennsylvania, fully funded, the best I know, initially by Benjamin Franklin on a 100-year trust. Now, if you do that today, Shannon and Andrea promise to be there on the 100th anniversary to celebrate that. Shannon, tell us a little bit about yourself and especially about what your passion is relating to supporting this great law school.
Alan, can you hear me? Because on my end, my video is frozen.
I hear you fine. And you look
Okay,
great.
great.
Probably look better frozen than moving. So
Okay, well, I can't see myself, but I'll keep talking.
you look great.
So I am the Director of Development for UF College of Law, and my job is to really connect our alumni back to the college so they feel connected and understand what it is that UF Law is continuing to do to put out outstanding lawyers and to maintain UF Law being the top academic law legal professional institution in the state of Florida, and also the number 21 College of Law in the country. I get to have the amazing opportunity of educating our alumni on our coursework, our faculty initiatives, the externships that we do, and the clinical work that our professors maintain with our students, and really educating them on what opportunities exist to connect their philanthropic passions back to what pursuits they might be interested in donating to at the college. I have the best job in the world. Everybody's happy at the end of our conversations, and it's just an amazing opportunity for us to be able to really back to our alumni and to connect with them. So I did go to Florida State for my law degree, so you can kick me off the call at the end, but I came back home and I found my rightful place, and I'm a Gator at heart, so go Gators.
All right. Well, some of my best friends went to Florida State. Andrea, please introduce yourself and tell us about what your passion is.
Thank you, Alan. So yes, I'm Andrea Fourman, and I work in the Office of Estate and Gift Planning for the university as a whole. So the gift planners that I work with, we each kind of support certain colleges and units across campus as a resource for gift planning conversations. So I have the opportunity to work with the College of Law, which is really exciting for me because I am a graduate of UF's College of Law. So I get to work with Shannon, and then I work with other colleges across campus as well, educating donors about different tax advantage ways of making gifts. So basically helping them to make the largest contribution that they can to the university at the lowest cost to them.
Beautiful. So, and you're able to do this hours and hours every day, whereas most of the professionals on this webinar, like me, I'm very interested in this area, but if I do 1 hour, 2 hours a week of charitable planning, that's a good week for me. So it's great to have your experience available. So I'm going to guide us through slide 9 here. This is a continuing education course, and I think it's important for people to know how these rules work. And Shannon, you are frozen. So
I know, it's so weird.
You might want to feel free just to exit and then come back in. And we promise that we will probably let you back in. All right. So number 1 here is for 2021, people who don't itemize can still give up to $300 per person to a public charity, or $600 per married couple. So if you've been itemizing and bunching and giving only every other year, if this is your every other year, which we'll discuss later, you can still, if you're a married couple, stroke a check for $600 to charity and get that deduction. And if you're an S corporation, you can this year deduct up to 25% of your taxable income making charitable donations. It's normally only 10%. The other thing I want to point out is bunching deductions. So if you're a single person, your standard deduction, you get this deduction whether you have medical, whether you have interest expense, whether you give to charity, whether you have property taxes or not, you get a $12,550 deduction. So you don't really get a benefit from giving to charity, paying your property taxes, paying interest on your home mortgage unless you go over that $12,550. So if you are planning to give money to charity, then every 2 or 3 years, instead of giving, say, for example, $5,000 a year to charity, you would this year give $15,000 to a charity or $15,000 to what they call a donor advised fund, get a better tax deduction situation because you're over your itemized deduction, and then use the donor advised fund to transfer the property out. And I'm sure that Andrea would gladly receive $15,000 and put it somewhere and then distribute it $5,000 a year to pay for scholarships or to pay for clerical help for professors, which is something I'm working on in order to do that. Now, in the yellow here, if you have your own private foundation, which is fun to have because you get recognition and you get to say you have a private foundation, and you get a tax deduction for putting the assets in there now, even though you keep them, you control the foundation, and then you dole the money out to public charities such as the university whenever you like. And you can give up to 20% of your adjusted gross income to your private foundation. And there's Shannon. And are you frozen? No, you thought out. That is fantastic. Look, she walks, she talks, she can even wave. So then if you want to have a private operating foundation, you can give more, get a bigger tax deduction, very similar to a public charity. Go ahead and put your $1 million in there, get a $1 million deduction, use it against your adjusted gross income, and then dole that money out or use it for an active charitable activity, which could be working with Shannon and doing active scholarship work, where Shannon would give you the candidates, but you would interview them, you would talk to them, you would mentor them, you would give them the money, you would check their grades, you would give them awards, et cetera, et cetera. And that makes you a private operating foundation, so you would get the same tax treatment as you would if you had given to a public charity for almost every purpose. Now, something really special that we have this year, and this year only, is the ability to give cash to get up to 100% of your adjusted gross income deducted this year. And a lot of you on this program have clients that are going to give a lot of money when they die, and they're getting older and feebler, and they're losing the ability to get an income tax deduction. So it's crazy. If you're going to give $22 million when you die, and this year you could save $400,000 in taxes by giving an amount equal to 100% of your adjusted gross income, you're not going to need the money. It's crazy not to use that opportunity. And then on the right-hand side, on the purple, I think you must know that if you're over 70 and a half, you can transfer up to $100,000 a year directly from your IRA to a charity, and you can use that to satisfy your minimum distribution rules. Well, this year it is unlimited. If you are over 59 and a half, you can take as much as you want out of your IRA. That causes adjusted gross income. And then you can give as much as you want to charity, and that reduces your adjusted gross income. So if your clients have millions of dollars in an IRA and they've been doing $100,000 a year, please make sure that they know that they can go over that. And if they're over 59 and a half and they think they have to wait till they're 70 and a half, they don't have to do that this year. So Andrea, Shannon, anything that comes to mind? I get the impression that you get really busy in December and really busy on December 31st.
Yes, we do. Definitely.
All right. Now, you could get out your number 2 lead pencils, because number 2 lead pencils is what I used when I took the bar exam. And I did a little bit of a UF Law gratitude exercise this weekend. And I went through a lot of the reasons that I am so fortunate and have so much thankfulness that I was able to go to a state school. I could not afford a private school, even with scholarships that were available. That it turned out that this state school was only 2 hours from where I grew up, so I could keep my relationship with my parents and with my friends, and that this turned out to be a really, really wonderful school where somebody who came from modest means was able to eat and drink and drive a car around and study and have some fun. So I just feel very fortunate for all of this. And I realize as I think about it, and as I spoke to Howard Rosenblatt, and we're going to play a video by him at the end, that I just never would have had those opportunities if the people who came before me and caused this law school to be built and this law school to be supported, if they hadn't done all of those things, there would not have been a seat for me at the table, in the classroom, when it was time for me. And I don't think I would be a lawyer today if there hadn't been that type of support. So yes, the government helps a law school, but more help is needed. Whether you're going to help a student who honestly is eating macaroni and cheese because they can't afford meat because times are very tough for students, or whether you're going to help a professor who's drastically underpaid, it's time to do that. So you might take the same gratitude exercise. It caused me to decide to write a check today, which I've discussed with Andrea and Shannon. And, you know, I just feel bad that I didn't write a check last year. Page 12. These are completely new slides. I started them Saturday morning. I thank Debbie Gray of my office for a lot of patience in helping me put together. And these are a separate handout for you. And you can print these out. And then I recommend that you Scotch guard them and review them in your hot tub. It's really good hot tub weather. And my friend Dave Zill from the University of Florida Law School used to sell hot tubs. So in memory of Dave, I will, if you make a donation today, I will personally send you a laminated set of these documents. And I wanted to get 50 ways to leave your legacy, and I've only come up with 39. So, you know, that says something good, which is it's not as complicated as it might be. But on this page 12, I've said, give your 300, give your 600 if you're a married couple. If you itemized your deductions, go ahead and do some bunching. If you're over 70 and a half, get into the IRA transfer. But then I have collectibles. So just a minute on collectibles. Quite honestly, clients come in the office, you know this, and they have $400,000 worth of jewelry, and their kids are going to sell it at a pawn shop when they die for $80,000. When you give jewelry to a university, and the university agrees to display the jewelry or otherwise use the jewelry, I don't know, Andrea, if you and Shannon just wore the jewelry, if you wore this old ugly jewelry, that would be a use by the university. That might work. But anyway, the client comes in with $100,000 of jewelry and says, I'd like to help the university. Well, you know, you're able to appraise it based upon the way you bought it. So it's a retail appraisal. You get that appraisal at $80,000. You paid $100 for it. It's worth $20 in the real world. You appraise it at $80, which is what it's worth at the place you bought it. You donate it. 80 times a 40% tax deduction is going to be a $30,000 benefit, so that you can go out and buy some more jewelry. So think about that on the jewelry side of things. And quite candidly, that's what I'm going to do, because I inherited some jewelry and it's really ugly now and it's old. But I can still go back and get it appraised by the people who sold it to my mother who left it to me. So that's pretty neat. Another thing that's very neat is if you have a building, you've completely depreciated the building. And it's old and it's dusty, but it's worth a lot. You don't want to let go of it, but you want to help the university. You can put that building in your private operating foundation, get your children to manage that building, and take the rent income and use it for scholarship programs with the university. And that's what 2 of my clients have done. They meet with scholarship recipients, they mentor them, they give them money, and they feel really, really good about it. And they feel good that their building is not going to go to waste. And when the client dies, the building will be sold and the money will then go to the university. The other thing I mentioned here for outright gifts is, Andrea and Shannon, where do you go to parties? Do people throw fundraising parties for you?
Not in the past year.
Not recently.
I really like having parties, and my wife Marcia is not as crazy about parties, but if the party is a fundraiser, she'll let me have the party, and the party is tax deductible and a lot of fun, and my clients will enjoy a fundraising party. Now, I don't think I can write off the redecoration of the home that always happens before these parties, but still, having a party for the University of Florida College of Law in your city planned ahead would be a really nice gesture. And then the final thing I have on this list, and a tax lawyer named Joel Bronstein told me about this probably 30 years ago, and it's resulted in a lot of charitable donations. He says, when you have people in a dispute, if it's a $20,000 dispute, have them each give $10,000 to the other person's favorite charity. And that really breaks down walls. And whenever I have a client who says, you know, the bill looks a little bit high, or do you really have to charge that much for this particular service? And my answer is, here's 3 charities. You could just give the money to any one of them. Because Marcia and I have annual charitable giving goals. And I don't really care if my annual charitable giving goal comes from my checkbook or my client's checkbook or my opponent's checkbook, as long as it's going to reach the goal. So Shannon was so shaken by that, has disappeared. Also on page 13, I'm going to show you my fee agreement. My fee agreement says if there's money left in the trust account after I've done my work, the first 500 left over goes to a charity, and anything above that goes back to the client. And clients have said, why do you do that? And I say, because clients who don't mind this provision are really good clients. And clients who have an objection to this provision, I can take the provision out, but I know right there and then that they're not going to be as good a client. So my list of 39 ways to donate goes on and on and on, but I'll mention very quickly on page 15. When the client wants to leave money when they die, the best way to do it is usually not by an outright disposition, because if I die and leave $100,000 to the university, my family does not get an income tax deduction. If I give the 100 while I'm living, I'll get the income tax deduction. But if I provide a trust for my spouse or descendants, and that trust says, give the first 100,000 of income generated to the university, then that income goes to the university and is not taxed. It's not subject to tax, so that'll save my heirs $40,000. And I thank Professor Calfee for always talking about distributable net income. You want the distributable net income to go to a charity, and you have to have 642C friendly language to do that. And also, why would I give $1 million to charity on my death when my IRA worth $1 million could go to charity? So many people leave $1 million to charity, then their IRA goes to the children, and the children pay $400,000 of income taxes pulling that out. Why am I talking about a 40% tax bracket? Well, that's my best guess as to what the tax bracket's going to be at the end of this year for most of our good clients. So those are some of what you're going to find on those pages. On page 20, you're going to find all the restrictions that apply to all kinds of charitable organizations leading you to conclude that the easiest thing is to let your clients donate directly to charity. So now I've got the same slides again, but I've got supplemental materials under each slide. And Shannon or Andrea, do you want to go ahead and lead us through how you receive gifts, how the website works, and of course add on and correct anything I've talked about?
So with the university, all of our gifts are managed through the University of Florida Foundation. Of course, you're able to designate your gift. For me, of course, I hope everything goes to the College of Law. You're able to designate, we have over 200 funds at the University of Florida College of Law that you can designate to, whether that's to the tax program and the LLM program directly, student scholarship, individual student scholarships. If you have a particular interest, it's first gen student scholarships, or students from Orlando or Tampa. There's a ton of different types of scholarships supporting faculty, experiential learning, and summer stipends for students who are interested in programs that may not be big law and they don't make a lot of money during the summer. Whatever your interest in supporting the College of Law, there's a way to give to it, and you can do that right online, or the website is here, or you can mail a check straight to the University of Florida Foundation, and you can designate on the check how you would like that money to be designated. Of course, having a conversation with Andrea or myself is very easy, and we can help you figure out what the best way, what the best vehicle for giving is, depending on what your interest may be. A lot of people choose to do a multi-year pledge just because it's easier and it allows you for some more flexibility in planning what your appropriate tax situation will be. Also allows the university to plan for what their financial future might look like, and the college to plan for if there's going to be scholarship dollars coming in. Andrea, do you have anything to add about this particular page?
No, I think you've covered it really well.
Yeah.
And I really like the fact that you guys have a phone number that can be called, and you can just take a credit card.
Yep, easy.
But how difficult is it to take stocks and bonds that are publicly traded? If in my Schwab account that have a very low basis, is it hard or easy to transfer those over to you?
Yeah, that's easy as well. We try to make it as simple as we can. So yeah, if you're interested in donating stock, feel free to reach out to me directly, and I can walk you through that process, and it's simple.
Tell me, I saw on the website that for $100,000 I could fund and name a scholarship. So for $100,000 there could be the Marcia and Alan Gassman LLM scholarship for people who went to Central Florida and can't afford to go to the LLM program.
That's right.
Wow. And how much would that student receive a year?
So it would spin off roughly $4,000 a year in perpetuity. So that, and you would, for as long as you're living, at least know who that student was, and we would connect you, where the student would write you each year, and you would be able to know who they were. We've been better in the law school over the past few years about developing mentorship relationships with the scholarship donor and the student, so that they're able to kind of have a mentorship relationship as the student is pursuing their degree, so that they have some connection and they understand who's helping to support them. Scholarships are our #1 need. As we continue to rise in our rankings, one of the reasons that students are choosing the University of Florida is the fact that coming here is so easy, but we are recruiting against universities that have huge endowments and are giving full rides and stipends to the best students. And we are recruiting the best and brightest students. So they are getting, top dollar to go to some of those Ivies, and we are recruiting hard against them. So those scholarship dollars are really important.
What is the tuition now to go to the University of Florida College of Law?
So for traditional JD, in-state tuition runs about $22,000 a year.
Wow. I think it was 10% that when I went in
1980.
And Alan, if I can add to that, a lot of times people will also, they may not have the means to set up that $100,000 scholarship during their lifetime, but they'll set it up through a bequest. So that can be done as well. You can create a scholarship through a bequest. We actually have a donor at the law school that we're working with currently who did that. So he has the bequest set up to establish a scholarship that'll be in his mom's name. But he wants to go ahead and start seeing the benefit of that now. So he's going to start making annual gifts that will fund that scholarship, even though the endowment won't actually happen until he passes away.
So maybe he'll give you 25,000 a year for 4 years, or 10,000 a year for
Right.
11 years, or something like that. And the
Right.
scholarships can begin. Well, that sounds like a great. You'll have to talk to Marcia about that. Great opportunity, especially a great opportunity for a successful law firm who wants to be known in the state of Florida, because I assume that people hear about these scholarship programs being set up. What is the recognition?
So the recognition is through the endowment name itself, and we do recognize our scholarships on our website. Most of our stuff is all done virtually now and recognized that way, and through our student body. And our students talk about their scholarships, so it's really done through a recruiting tool. And most of our scholarships are actually individual donors, so that's I think different than what you're talking about with law firm scholarships. That recognition is more done through our on-campus interview process. I think a lot of the firms, if they have scholarships established, it's done more as a recruitment-based tool to kind of set it up with 1Ls getting their scholarships and putting their name out there from the beginning, so that their firm name is kind of in the mix as students are starting to think about what they're going to be doing for their internships after that 1L, 2L summer.
Okay, that's great.
We also, for the university, have a president's council that recognizes donors starting at the $100,000 level, and there's different levels within the president's council that have kind of different benefits, but that's another so that would count if you make a gift to the law school or to anywhere else at UF.
Okay, beautiful. So I'm going to make a donation match here. Besides the donation I'm giving you for clerical assistance to LLM professors, I'm going to, anyone, and especially if you've never made a donation to the university, at least come up with $20.21, and I'll send you my 8 Steps book. It has nothing to do with alcoholism, by the way. It has to do with estate planning. And then if you give $40.20, I'll match that. And I'll give you also our IRA trust planning book. And if you go up to $60.60, I'll give you Gassman and Markham on Florida and federal planning, and your choice of any of these books on page 27. So go ahead, make these donations if you would, especially if it's your first one. You know how important it is to write that first check. If you don't want to go to the website, if you just want to email me and just put in the RE line, 3 books, $60.60, I'll do the rest. I'll invoice you, I'll send you the books, and I'll match your donation. So thanks for your consideration on that. Now, here is my representation agreement, where I give the client the choice of 2 charities who will get any money that's left in the retainer account. When clients ask our firm, isn't that first conference free? No, but if you prefer, what you pay will be donated to a charity. Mr. Gassman's favorite charities are the University of Florida College Law and the Sarah Gassman Music Foundation, or you could pick one yourself, but no, the first consult is not free. And of course, the clients who don't want to do that, maybe they would have been a good client, but more probably not. So besides giving while you're alive directly and giving on your death, using charitable remainder trusts and charitable lead annuity trusts provides a really good financial and tax opportunity. Because imagine if I have a tree and I would like to get a tax deduction for giving that tree away, but I want to eat the fruit from that tree for the rest of my life. I want the recognition that I give the tree away, I want to make the commitment so that nobody in my family will change their mind and not provide this tree, but I want the fruit, and I want extra fruit the year I give it. I want a tax deduction. So that is the charitable remainder trust. And I'll just say here, I know a lot of you are not tax lawyers and CPAs. I've got a charitable remainder trust. I put assets into it. It can give a fixed percentage of the value of the assets every year, or a fixed dollar amount every year for a lifetime or a couple of lifetimes, joint and survivor with my spouse. Or you could go a term up to 20 years fixed, with the remainder interest going to a charity. And Andrea, did I hear you correctly when you said that the university actually, if I request, would prepare the trust and serve as trustee and not charge for that?
Well, that's somewhat correct. So yes, we can serve as trustee of a charitable remainder trust as long as long as it's at least $50,000, and as long as at least 50% of the remainder is coming to US. We can, if we're going to serve as trustee, yes, we can draft the trust document. So then all you really have to do is have your attorney review it. And we work with TIAA Caspic to manage our gift annuity or charitable gift annuities, as well as our charitable remainder trusts. And they're a national leader in this space. They manage over $7 billion in assets currently. So when we've worked with them for the whole time I've been here, which is over 7 years.
Yeah, TIAA has been in teachers' annuities for over 100 years, and their trust company does a fantastic job at a very, very low price. But what a great program that is. So I have a client I spoke with last week who has $400,000 worth of stock in a bank that only cost them $20,000, and they don't want to pay the tax when they sell it, and they want to benefit their favorite charity. So they're going to put it in a charitable remainder unit trust, which is going to pay them 11% of the value of that trust every year for 20 years. And after 20 years, what's left goes to charity. And honestly, the value of what ends up going to charity might be $40,000 to $60,000 or $70,000. But in the meantime, they'll have the benefit of all that money without having paid a large capital gains tax to Uncle Sam. They'll pay that capital gains tax over the 20 years. So they can really come out ahead and feel really good about it. And all they have to do is name the University of Florida to get half of the remainder, and they won't have to use a lawyer other than a cursory glance over the documents, I would think. So is there a story behind this building?
Yeah, so this is actually, Alan asked me to come up with some examples of donors who have funded charitable remainder trusts. And this is a photo of a vacation home that was used to fund a charitable remainder trust for a couple who had used, the vacation home when their children were growing up, and then when their children grew up, it really wasn't being used, and the children didn't necessarily want to take it over. So they decided to put the property into a charitable remainder trust. And then once that, and again, so they avoid paying capital gains taxes that they otherwise would have paid had they sold that property. And then once the property, once the trustee sells the property, then it will flip to a standard charitable remainder unit trust and start paying them the annual payments the year after the property is sold.
Wow. So tell us about a retirement flip, Crotty.
Yeah, and so this is another example that I thought of. It's kind of outlined on the slide, but basically the donor established a flip charitable remainder unit trust that it'll become the charitable remainder unit trust when he, at a certain date that he has identified as when he plans to retire. Before that date, it'll be a net income trust. And this is from a donor who actually had established an endowment in memory of his daughter who had passed away while she was attending UF. So the remainder from the charitable remainder trust will go towards that endowment. And he created it so that he has a second marriage and wanted to make sure that his wife, was taken care of in the event that, during their retirement and in the event that he were to pass away as well. But wanted to ensure that the remainder would come to UF and go to that endowment that he had established for his daughter. So it's a good option for someone who's planning for retirement, but maybe has that need for that charitable deduction today.
Yeah, and one thing I find is with most couples, one spouse is more generous than the other. And one spouse is ready to stroke a big check and the other one's not so sure. So then the tax lawyer comes in and makes it complicated so that the reluctant spouse sees the tax benefits. And she also sees that if this husband of hers leaves her, she's still going to get a lifetime benefit from a charitable remainder trust that he sets up while they're still together. And she's going to get 90% of the actuarially calculated value. So, when you have clients and one is gung-ho to donate and the other is reluctant, you want to send them to Shannon and Andrea to see if they can mediate, a nice arrangement. And then do you want to walk us through pages 46 and 47?
Yeah, so these are just, these show our illustrations that we can provide. So for anyone who's interested in considering a charitable gift annuity or a charitable remainder trust, this just kind of shows you the type of illustration that we can provide through, and this is through the software that's provided by TIAA Caspic. So this shows, I just did kind of a standard $100,000 comparison of a charitable gift annuity and a charitable remainder trust for a donor who's 72 years old. So it kind of shows you what the charitable deduction would be, what the annual payment would be for a charitable gift annuity, and an estimate of what that would be for a charitable remainder trust, because obviously that's going to vary. But then it kind of allows you to compare and contrast different options. And we, like the slide says, we can also, I think the software is really neat because we can actually go back in time and show how a trust would have performed during a specific historical time frame, basically. So you can see kind of how it would have performed in a really good market and in a down market as well.
Yeah, and if anyone would like to give Andrea some numbers in a real situation, then we could have Andrea do a live webinar on your situation for you and your clients without giving your clients names. And I find clients love that. When I tell clients, I'm going to show your situation on a webinar next week, they really get gung-ho about it. Now, I wanted to show you some numbers that we did this year. We had a client who wanted to help a university and also wanted their children to learn about stocks and bonds. So he put $100,000 into 4 charitable remainder unitrusts and said to the kids, all right, here's your charitable remainder unitrust. It's being watched by the university. You have a term of years where you're going to get 10.87% of the value. Invest it wisely and good luck. So the kids are, they can't raid the cookie jar more than 10.87% a year. They have to be responsible for it. They have to learn about stocks and bonds and how those things work. And based upon the year, a 55-year-old can get 11.84% a year for life, a 50-year-old 9.64% a year for life, or if there's a 20-year payout, you see the 10.87%. And then the client's got a nice charitable deduction for doing this. You add up the $21,000 charitable deduction for the 55-year-old, multiply that by 40%, that's an $8,000 tax savings, while this is better than giving $100,000 to each child. So we call that the self-policing charitable remainder trust, because you can't tell your kids what to do, but your CPA and the IRS are able to. So I was fortunate enough a couple of years ago to speak to a group I honestly didn't know about, and that was the Advisory Network. And can you tell us just a little bit about what the advisory network is? And then we're going to hear a video from Adam Rourke, who's a very knowledgeable LLM graduate who's in Gainesville, who I really enjoyed speaking with earlier this week.
Yeah, sure. Thank you. So yeah, I think Adam does a great job of explaining it, but I'll just give a brief overview. The UF Advisor Network is basically a professional association of tax attorneys, estate planning attorneys, CPAs, CFPs, kind of anybody who is working with clients on charitable planning. And it's so that kind of serves two purposes. One, we have a directory on our website. So when Shannon's out meeting with somebody in Atlanta and they say, you know, I really, you know, I've been looking for a financial advisor in the area, Shannon can direct them to the UF Advisor Network to try to find someone that way. And then for the advisors, it's also a way for us to keep them informed of what's happening at UF. So we do a newsletter, an e-newsletter 3 times a year, and we do an event once a year. And we really try to highlight programs at UF that might have broad appeal, you know, to many of your clients that they may be interested in supporting. Because we find, you know, UF is so broad. We have so many different things going on, and you know, an attorney may have a client who wants to support research in Parkinson's disease, and rather than going to some national organization, you know, in their backyard, UF is doing amazing work and with respect to Parkinson's research. So just making sure everybody's aware of what we're doing at UF and options for their clients to support.
And when I spoke to this group, I was really impressed at how friendly they were for me and how friendly they were to each other. This is really a friendship type of situation, and I was impressed that this room we were in was right in the stadium. So they went straight to the football game after this. So it was, you know, a great event. So I'm going to go ahead and play this video that I took of Adam, because I think Adam shows a lawyer. I wish when I was his age I was as involved and giving as much as he's giving. Okay, tell me about the advisory network.
So the advisory network is I think, fairly large group of attorneys, CPAs, life insurance agents, financial advisors, basically wealth advisors who have worked with clients who have a connection with UF. And the thinking, at least, you know, ideally, is these are people who are motivated to give back to UF, or where appropriate, steer their clients back to UF, you know, to work with clients who want to work with the university. The really nice thing about it, I find, is, you know, when I have clients who need assistance out of town, out of state, it's a good way of kind of narrowing that list when you don't know someone in that town. You know, when you've got a client who says, yeah, I know I could do this over the phone, or I could do this via Zoom, but I want to sit down face to face with a financial advisor. I want to go to their office. And, okay, well, you know, I don't know anybody in Palm Beach, but I can look on there and help narrow it down. You know, that's been beneficial in my practice.
And are there periodic meetings the day of football games, or how do
Yeah, so they do put on an annual conference. In years past, it has been tied in to one of the football weekends. They usually bring in speakers. They bring in at least one tax-related speaker who will come and talk. They'll have somebody from the financial sector, you know, come in who's sponsoring the program. So they come in and talk about their financial products.
Okay, so that's I was just very impressed with that group. So anyone who's interested in that group, of course, can email Shannon, and you've got the email addresses here at the bottom. So I think one of the nice vehicles for charitable giving that's a lot less cumbersome than a charitable remainder unit trust, and often more beneficial, quite candidly, is the charitable gift annuity. So I think everyone should know what a charitable gift annuity is. gift annuities go back to 363 BC. And it was interesting, 1831, John Trumbull gave more than 50 of his paintings to Yale in exchange for a $1,000 a year annuity. That's really good, really interesting. But Andrea or Shannon, can you just tell us a little bit about how a charitable gift annuity works? And you can give an appreciated asset to the university, not pay income tax on its value, and then get an annuity payment over your lifetime and not pay income tax on a substantial portion of the payments you get during your life expectancy, right?
Yep, exactly. I think I think you covered it for me there. So yeah, the charitable gift annuity is basically, it's a contract between the donor and the University of Florida Foundation to make that annual payment. It's a fixed payment, so we base the rates on the American Council on Gift Annuity. The American Council on Gift Annuity sets recommended rates, and that's what we follow. So it's a fixed payment. It's a good option for people who are, want that reliability of a fixed annual payment coming in.
Yeah, that's and then I have some calculations from Professor Hesh. So those of you who are LLM students who love to run numbers like we did in the LLM program, when you run these numbers, you can see how the charitable gift annuity will beat a charitable remainder trust if the client doesn't mind having less go to a family after death. If the client is single, not married, not worried about supporting children, the charitable gift annuity will outperform a charitable remainder trust under some situations. Now, page 62, and we only have about 5 minutes left, and Shannon and Andrea, for those of us who practice law, 5 minutes means 3/10 of a billable hour. But we have 5 minutes and lots of things to cover, so we might do a part 2. But I want to make sure you understand, if you're an attendee, that if you have a client who is about to sell a business or a property for a big capital gain, they should consider charitable liquidity planning. And I'm going to give you an example here of one we've recently done. The client comes to us and says, my company is worth $3 million, but I'm pretty sure I could sell it for $5 million if certain things happen, and I'm hopeful that those things will happen. Well, you put that company under a dynasty trust. So he keeps 1% or she keeps 1% of the voting shares, sells 99% non-voting to the dynasty trust for a $2 million note. So the most that's going to be in her estate is going to be $2 million. And she makes a $20,000 capital, she makes a $200,000 seed capital gift. So she's only used $200,000 of her $8,700,000 exemption, and she's gotten that company frozen to $3 million in value. Now, just before the company sells for $5 million, before she is legally bound to sell it, she's got a letter of intent, she's negotiating a sale agreement, but she's not signed the sale agreement. She changes the non-voting stock so that the holder of the non-voting stock has a put right, and therefore there's no discount. And the dynasty trust contains a provision which allows the contribution of dynasty trust assets to a charitable remainder unitrust. So now the dynasty trust generates a income tax deduction. If it's only 10% as the remainder interest, she's going to get a $500,000 income tax deduction. And when the company sells, there is going to be no income tax owed until the money is withdrawn from the charitable remainder unitrust to go to the dynasty trust. And remember, the dynasty trust is not subject to federal estate tax. And if she sets up the charitable remainder trust with Andrea's assistance, she can set it up as what is called a flip NIMCRUT. And for those of you who are tax lawyers and CPAs, you may recall that with a flip NIMCRUT, you don't have to take any distributions out until an event occurs, and you can control what that event is and when it occurs. And therefore, the bottom line is, when you run the numbers, and I'll be glad to send somebody, the examples and more of the literature, is this trustee of the Dynasty Trust doesn't have to take a dime out of the CRUT for the first 14 years. And then in year 14, we'll take a huge makeup payment, and then 11% a year, years 15 through 20. 92% on average of the assets come out of that CRUT. 8% is left for the University of Florida College of Law. And this client has not had to pay income tax or estate tax, deferring the income tax and letting the money grow, basically tax deferred, tax free, for 15 years. Now, if the client has a terrible year one year and has a net operating loss, then the distribution can be made. But do talk to Shannon if you have, and Andrea, if you have a client that's going to hit it big, because this type of planning is common among those of us who use it, and not so common among people who don't necessarily use it. Now, we've got the notification of revocable commitment here. If you or your client want recognition for a revocable commitment, your intent to make a donation, then the reason the university does this and gives you this recognition, even though it's not binding on you, is because they know a large percentage of people who do this will stay true to their promise and their objective. So these are really nice programs, and you could just buy term life insurance. You don't get to deduct the premium, but you could just buy a $100,000 term life insurance product. If you're 40 years old, that may only cost you $500 a year for 10 years to buy $1 million of coverage. Make the university the beneficiary, get some recognition, and then maybe convert that insurance to permanent later. So lots of really good opportunities here. The other one I wanted to mention is, let that IRA, instead of going to a trust for the child where it has to come out within 10 years under the stretch rules, have it payable to a charity or to a charitable remainder trust, and then it can stretch out over 20 years, or over the child's life expectancy. You can stretch out the income that comes out of that IRA for a very low cost. The cost is the remainder interest in the IRA goes to the charity. So I have a lot more than I can cover here, but I wanted to let you hear from Howard Rosenblatt, and then let Andrea and Shannon say a couple of things to close, and then our billable hour will be over. And Howard, thank you so much for spending this time with me, and I think everyone's going to enjoy what Howard had to say. Tell me what you want to express to people who would watch this webinar that we're giving on charitable giving for the law school.
Well, I think that the three things that I would talk about is, number one, if you're in a situation where you're forced to take RMDs, you certainly could have some direct transfers to the law school, which would avoid your having to pay tax on the RMDs. Another thing is, you can make a qualified charitable contribution or distribution, QCD, in order to lower the amount that you would take in subsequent years. And the third thing is that you can just, give appreciated stock or cash, or we'll take anything.
And
I've done all four of those.
Have you?
Yeah.
What do you feel best about when you make these gifts, besides the tax savings?
Oh, I don't think I do it for the tax savings. That is an added benefit. I give money to the law school because the law school has enabled me to have a very successful and enjoyable career. It's given me the opportunity to, to expand my functions to serve my clients.
So when you call and ask for money from your classmates for the law school, what are the magic words that you use, and what's the reaction that tickles you the most?
Well, I ask people how they're doing. Are you doing well? Are you healthy? And I try to have just a social conversation with them. I haven't seen you in 30 years or 20 years or whatever the time frame is. Where are you practicing? What area of the law are you practicing? Just a general conversation to establish a rapport. And then once you, and mostly it's questions about them as opposed to, let me tell you about me, because I think people like to talk about themselves. And once they provide me with that, occasionally there will be things that they say that will prompt me to direct a solicitation in a particular mode. But assuming they're successful and assuming they're well, and that they appreciate the benefits of their education, I say to them, you know, the university needs your help. Tuition now is at record levels. What you and I paid to go to law school, and I went to law school in the 70s, and a lot of the people I call went to law school in the early 70s because my undergraduate was 69. I graduated in 69. And didn't go back to law school till 77.
Okay, well, Howard, this has been really good. Is there anything else you want to say or that comes to mind? We can always do another one of these whenever you're ready.
Yeah, I think that the main thing is to understand and appreciate the fact that we've been blessed to have successful careers, and it's time to help others get on that same road. We'll be looking for successors. We'll be looking for younger attorneys to shoulder a lot of the burden that we've been bearing that we took on from the generation that preceded us. And so if we can help others to get to that point, then that's good for us. One of the things the law school is proudest of, I think, is how many of their graduating seniors make pledges of giving money back. And to the best of my knowledge, and I haven't checked with Laura, and I'll be with Bob this afternoon. I may ask him. To the best of my knowledge, those people fulfill their pledges, and so you get them into the habit of giving when they're young, and hopefully it will continue as they age and as they make more money and as they're become more successful.
Yeah. Well, hats off to you for making a great example for all of us and being a leader in this area. And I'm so happy that not only do you love the law school, but you're right there. You're employing law students, 6 of them this summer,
Yeah.
and you're calling people, asking them to contribute, reminding us all that we wouldn't have the professional success we've had if not for this College of Law. So thank you so much. Okay, Andrea, Shannon, any closing words of wisdom?
I'll just say thank you so much, Alan, for doing this. I've really enjoyed it, and just to kind of leave people with the idea that there's so many different options for giving, and it's very customized and tailored to individual circumstances. So Shannon and I are here. We meet with people individually and learn about where they are and figure out kind of what's the best option for them. So we hope to have the opportunity to talk to a lot of you one-on-one. And thank you.
Shannon?
Yeah.
Oh no.
I echo that. I'm frozen again. Thank you. Go Gators.
Well, filling in for Shannon, Lloyd says, thank you very much for supporting and have a fantastic day. For those of you who are working like me, may the rest of your day be completely billable right up to the clock. Thank you very much.
That's right. Go Gators.
Go Gators.